I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Wednesday, July 21st. We've got three different markets for you today: corn, soybeans, and wrap things up with lean hogs. To kick things off, we've got the December new crop corn chart pulled up here. It was a bit of a bloodbath in Monday's session, but a lot of that, I think, was on the back of the risk-off mentality across a wide variety of markets, including crude oil, which just got demolished. I think it was down close to $5 at one point. Equities were down 2 to 3%. But yesterday's session, we saw a reversal of that, and then today we got follow through on that reversal to the upside, and working on closing that gap that everybody has got their eye on here for that December corn contract. That 573.5, that 575 area is really what we're keying in on. We wouldn't be surprised to see this gap go unfilled here while we're up here. We're leaning a little bit on the bear side, or the sell side, especially with producers who are looking to lay off some risk or potentially put a floor in the market. From the technical perspective, this is a good resistance pocket up here to sell against on the first test. A break and close above here, and we probably go retest this trend line resistance, which we've been making lower peaks. And that comes in a little bit closer towards 590. So those are kind of the risk ranges we're looking at here in the very near term. Now moving over to the soybean market. A little bit different of a story. $14, psychologically significant, and is being defended relatively well by the bear camp, all the way up to these spike highs from July 1st, which comes into the mid 1420s. We tested that in the Sunday night trade, but that Sunday night high came in, I think, within 3 minutes of that Sunday night open, and just drifted lower throughout the day, or throughout the next trading day. So not the best price action for the bull camp. So we've been a little bit more optimistic on soybeans, but the inability to get it out of this, above this pocket with some sort of conviction, is a little bit of a caution flag here in the near term. If we get out above here, though, I think there's clear skies up towards those old contract highs. Again, as with corn, we're working with producers to help lay off some risk and potentially put a floor in the market. But as far as soybeans and corn comparison goes, I think we're a little bit more upbeat longer term on the possibility of upward mobility in the soybean market relative to corn. Now, wrapping things up with the lean hog market, August has really stalled out, but this is the October contract, and as you can see, it has just been screaming higher here over the last several weeks after we puked out, made a bottom, and rallied back up here to these previous resistance points all the way back in May, breakout point at the end of May, and this was really where the selling accelerated in the middle of June. So I wouldn't be surprised to see the market stall out a little bit here. We've been working with producers and those who want to be on the short side here, initiating some new positions on the short side of October hogs here in today's session. But again, kind of as the same as is with corn and beans, risk reward, breakout and close above this pocket, and you take your medicine, move on, and look for the next trade to set up. But as of right now, we think this is a good risk reward trade to the sell side, so long as this pocket is defended all the way up towards that 93 level. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.